Good morning, good afternoon, good evening, wherever you are in the world. I'm Robin Amlow, Managing Editor of IBS Intelligence. Welcome to this webinar on the importance of digital banking platforms in a post-COVID-19 environment. The need for digital banking has never been greater than now. The pandemic has forced consumers to access their funds and use banking services only through digital channels. That's a change that has left many banks scurrying to ensure that they have the technology infrastructure in place capable of providing end-to-end offerings of services and products via digital channels. In this webinar, we'll be discussing the challenges and strategic imperatives that banks need to consider while implementing a digital banking platform to be able to introduce new products and new business models. Our discussion will also touch on the features, functionalities, and evaluation approach for selecting the right best-in-class digital banking solution. Your panelists today are Marcou, Business Development Manager of NetInfo for the EMEA region, an accomplished professional with many years of experience in the deployment of solutions for financial institutions globally, coupled with solid knowledge of IT solutions and more than 20 years experience in financial services. And Ritesh Jain, entrepreneurial technology leader and board advisor, with 2 decades of global experience in digital technology, business transformation, and operations with Fortune 500 companies, including the likes of HSBC, Visa, and Maersk, to name just a few. We're also joined by my colleague Vipin Vishwanathan, Senior Lead Analyst with IBS Intelligence. Vipin has more than a decade of experience in strategy consulting and market intelligence research for the financial services and fintech industry. And Vipin also led the development of the companion white paper to this webinar for NetInfo. So let's turn to our focus topic, and we'll begin with a poll. So you need to play your part, please. Now, please select the key reason for accelerating your digital banking strategy post-COVID. Is it drop-in new customer acquisition, existing customers demanding a digital experience, competition from neobanks and peers offering digital banking services, regulatory enablers such as eKYC and digital signatures, or drop-in utilization of physical channels, branch, ATM, etc.? Please vote now. And I'll give you 30 to 40 seconds or so to make up your minds, and then we'll take a look at the poll results. Just another 10 seconds or so. And if we can see what the results of your deliberations are, we'll put them up on screen. Top reason, it would appear, competition from neobanks and peers offering digital banking services, 38%. So is this anything of a surprise to our panel? Would anybody like to comment on the results of the poll that we've just taken, gentlemen? Harris?
No, not. Yes, I'm not a surprise. It's actually going to have a few slides after at the beginning of the webinar, and the competition from neobanks, very important, and it's bang on my first slide. So yes.
Well, we'll come back to that then, shall we?
Yes, absolutely. I was expected, for sure.
Does that get your vote as well, Ritesh?
Absolutely. And that is one of the main reasons.
Well, perhaps we should move, therefore, straight on to the brief presentation that you're going to give us, Harris, before our discussion proper starts. So perhaps if we can have your comments right now.
Yes,
on
absolutely.
results.
Okay. All right. Well, I think before we mention COVID-specific drivers, we need to consider other variables. Okay. I think tech-savvy bank customers are forcing their banks to rethink their digital banking strategy. So people are used to technology. They want to handle their finances digitally on the channel of their choice, where and when they please. All generations now, especially digital natives, are used to world-class internet and mobile services, and they want to see these services replicated by their financial institutions. Quite rightly, they don't want to have a world-class service from other industries and not see it from their financial institutions. So this is a key driver, I believe. Different drivers in different regions, this is of paramount importance. Operational efficiency goals have been a driver throughout the world and throughout industries for digital transformation. So financial institutions want to do things quickly, efficiently, and cheaply. However, there are some different drivers in different regions. For example, in US and Europe, I think two major drivers have been the demands of customers expecting world-class digital services, and also the fact that robust ecosystems are in place. So we have very strong back-end systems, we have strong telcos that can facilitate state-of-the-art digital banking services. If we look at African region, however, the major driver has been financial inclusion. And this hasn't really been driven primarily by financial institutions. This has been driven by telcos. If we look at Safaricom with M-Pesa, for example. Okay. Point 3 was covered nicely in our first poll. The rise of neobanks, fintechs, and techfin companies, including Goliath companies from GAFA, like Google, Amazon, Facebook, and Apple, have meant an increase in competition, and they're taking a piece of the pie. And if financial institutions want to remain as a player in the market, they need to bring their offerings in line with the quality of the solutions offered by these new players. Okay. So COVID-19, coming to COVID-19. Banks have been closed, have been forced to close during much of the lockdown with COVID-19. And when the branches are indeed open, end customers don't want to go to the branch. They prefer to use digital. Digital is now the channel of choice for the vast majority of banking customers. An example of this, one of our major clients in East Africa has 95% of their transactions happening over our digital banking platform. So that's just goes to show. To give you a Cyprus example, having been based in Cyprus, we even see the likes of the government of Cyprus utilizing the open banking infrastructure of one of our clients in order to offer onboarding and allow citizens during the COVID pandemic to accept assistance in terms of funds. So they've actually piggybacked over an open banking infrastructure that we've included as part of our digital banking platform for a specific customer in Cyprus. Okay, moving on to the next slide. Okay, if we look at, this is looking at the global digital banking systems deal volume. If we look at the absolute numbers, they don't seem high. But when we consider that there are only 250 working days in a year, we see that from 2018, there has been there's been over one major digital banking deal happening per day globally. Okay, this has increased in 2019, you see, and we see the trend going in that direction. I believe COVID will just make this figure for 2020 higher. This is the trend for sure. Okay, if we go to the next slide. Okay, looking at some challenges and limitations of traditional channels of the bank. Okay, traditional brick and mortar banks are very expensive to operate. Maintenance of physical facilities becoming more and more expensive, and as I mentioned, a major driver for any industry is to lower their operational costs. Banks therefore need to rethink their traditional channels, especially when you keep in mind that a cost of a digital transaction can be many factors cheaper than a physical transaction. I think a figure, it could be 10 to 15 cents for digital and over $3 for a physical transaction to happen at a financial institution. And this is obviously a limitation of the traditional channels of the bank. Lack of uniformity is commonplace, I believe, in traditional sign-on applications that banks have in place. So a mobile application, an internet application can have a completely different look and feel, different workflows, and sometimes even having different data points. So it can have complete inconsistencies. Banks really need to offer a uniform experience, and this can be addressed very straightforwardly, having an omni-channel solution in place. So having an omni-channel engine that can handle this and dynamically address the end channels of the financial institution. So traditional channels do not offer tools for the customers to handle their finances. This is becoming more and more important, especially when people become more and more used to digital. They want to handle their finances by themselves. They want to set goals. They want to set budgets. They want to track their expenditure. And overall, it helps them, both them to personalize the experience and also for the financial institution to gain insight in a specific customer to help tailor journeys for them going forward. Customer onboarding has a big challenge, even pre-COVID, when you couldn't go to a bank to become a new customer. In order to become a new customer, you need to make an appointment, you need to take all your supporting documentation, you need to go to the specific branch at a specific time, make sure you take all your supporting documentation with you. And if you forget something or you're a bit late, then you have to do it all again. I think having a digital method to do this remotely is becoming more and more important. Now, older banking platforms are really not capable of offering functionality that modern individuals seek. This can include personal financial management, which I mentioned, also digital onboarding, and also open APIs, which are, again, from an open banking perspective, is becoming more and more important. Old banking platforms are also difficult to integrate and also maintain, and have no omni-channel capabilities. People are, these systems are still working on silos, which is not the way that a bank should be handling their digital channels to their end customers. Over and above this, older generation digital platforms have always had a large threat of cyber attacks. And that removes confidence from the end customer to use these channels. The newer generation platforms are equipped with much more stringent security protocols and protect their customers from potential breaches, and this needs to be addressed by the financial institutions also. Okay. If we move to the next slide. What are some global digital trends that we're seeing? I've mentioned most of them, but just to give you some more insight. Omnichannel, this is hugely important. Omnichannel solutions will enable a bank to reflect and manage their digital banking strategy. So this will allow them to centrally manage all their channels, products, services, policies, security, by keeping all the business logic within the omnichannel engine and providing a common interface to their backend systems. This will provide great flexibility and a competitive advantage to any financial institution that embraces omnichannel. Okay. Remote onboarding. This has taken off in the last few years due to new technologies such as face matching, which will see that the picture you're showing on a passport or ID is the same as your picture, then taking it one stage further and doing a liveness test. So it's saying, yes, the person that's trying to onboard, is this a live person and not a picture? Then we also have facilities such as OCR of documents, uploading documents in order to be in line with the needs of a specific legislation in a country. And then we can have a completely onboarding process A to Z, including AML checks, or it can be semi-automatic where you do pre-staging and then, if needs be, go to the branch to sign the document. We have clients who are 100% digital branchless, and the remote onboarding facility is the only method they have of bringing a new customer on board. Okay. Open banking. We've seen this in Europe. It's being forced by legislation, PSD2 directives. But we have seen after this, it has enabled a uniformity of service. So an end customer is no longer linked to one institution. They can use the mobile application of one financial institution to handle their accounts from another financial institution. Open banking, as we've seen, has enabled newcomers, fintechs, and neobanks to offer services that will help them acquire new customers. People like the tools that these entities are offering them, and they're quite easy to pick them up and use the solutions of these new entrants. Within outside Europe perspective, open banking is being embraced. We see it from a global perspective, and it's allowing banks and financial institutions to expand their eco-environment by offering services to governments, as I mentioned previously, insurance companies, and also offering tools such as Marketplace, where they allow their corporate customers to come in contact with their retail customers. So corporate customers could offer goods and services to their retail customers. And if retail customers are interested, it will also allow them at this stage to cross-sell and upsell loans, for example. So rather than just facilitating two customers to buy and sell, you can also make more capital by offering loans. Okay. Mobile payments, we've seen huge demand in developing countries. I've mentioned Safaricom at the past, but it's also very applicable for developed countries, especially when you consider if you leave your house without your wallet, it no longer matters. But if you leave your mobile phone behind, then you're going back to the house to pick it up. Now, mobile phones are hugely important extension of one's being, I say now. We can't live without it. So facilitating a mobile wallet that is linked to your actual bank accounts will enable quick transactions, reduce the transaction cost, and from a financial institution perspective, reduce the settlement time also. So I think mobile payments taking off, and it's going to, it's definitely the way forward. In the near future, I think advanced PFM with artificial intelligence recommendations is also going to be very important. Artificial intelligence engines are reaching maturity. They now are no longer science fiction, but science fact. And utilizing AI with PFM will allow the next best screen, for example. So if an end customer is using a mobile phone, they no longer need to follow a specific transaction path. If the AI realizes they have never used it, it will skip screens. Or based on analysis of data, it will tell them what's the next best transaction they can use. So I do think this will pick up a lot, advanced PFM with AI in the next few years. Okay. We move to the next screen. Okay, so what are expectations that anyone would have from a digital banking platform? We need a seamless customer experience. Customers need a consistent look and feel and an overall experience, always putting the user at the center of a journey. I mentioned GAFA previously, and this is the primary reason that GAFA companies have been successful, is that their business model is based around putting the customer at the center of any journey. And I think financial institutions need to replicate this in order to be successful in a digital age. I mentioned the tools such as intelligent personal financial management. I think this is something that's going to be expected from end customers in the near future. So it will allow them and end customers build and maintain their financial profile by leveraging on big data, and will also allow the banks to offer the predictive journeys that I've mentioned and make guided recommendations. Also allowing benchmarking, so banking customers can compare offerings, facilities, and costs against those that their peers are using. So this is going to be important going forward. Remote capabilities, I've mentioned the onboarding, which is hugely important, but we also have the evolution of peer-to-peer video assistance. Now, these video assistants has been around for a few years on the ATM platform, but now with telco infrastructures and technology and security being in place, this is now very applicable from mobile phones also. Now, if we look at customer support, I strongly believe that platforms should have inbuilt features that can help the bank do it themselves. So they need to, tools need to be in place to reduce the dependency of the bank to, for example, create new services by themselves, enabling them to have a quick time to market for a new product, and saving them on charges that they would need to go back to their provider of their digital banking. So having DIY services will help financial institutions going forward. Now, in terms of security, I think strong customer authentication, as per that outlined in PSD2, should be embraced irrespective of geography. Now, this security mechanism uses authentication based on the use of two or more elements. Now, this could be something the end user knows, something the end user possesses, or something that the user is. Now, adding this level of strong customer authentication to any transaction will ensure that any transaction is of the utmost security going forward. Okay, that brings us to the end of my short presentation.
Thank you very much, Harris. We will have time, I hope, for questions from the audience a little later on, but I'd like to begin with this to our panel. And perhaps specifically, Ritesh, if you'd like to give us your thoughts on this. What's changed post-COVID in the bank's expectation, not the customer, but the bank's expectation of a digital banking solution?
Thank you, Robin. Now, just to clarify, we are still under the COVID, and what will change? And it's the customer behavior. So what we have experienced in the last decade, the customer behavior and technology innovation is driving the change in the industries. And as Harris has said about the GAFAs and the customer experience, the customer have experience, they would like to see they would like to experience everything through their fingertips and what they get as a service from the GAFAs or the other channels. So why would financial services would be any different? Now, with the innovation in the banking and the financial services or in payments, what we have seen is, specifically in the last 5 years with the innovation like tokenization in payments, which has enabled contactless payments significantly. I would be expecting the financial services as a market rather than one bank would be providing a service. I would be expecting the customer expects a banking as a channel where it really doesn't matter that who is providing them the services. From the banking solutions perspective, because when we are moving into from open banking to open finance, and there was quite a lot of discussions around here. Now, the open banking only accounts for the accounts and the payments. And when you think about the bank at the moment, the first thing comes into the mind is the trust. So rather than the other third-party services, the customer is still trust bank more than the third parties. So banks need to focus on how they can maintain that trust and provide a lot better services to their customer, but not only from the accounts and payments perspective, but looking after the overall financial well-being of a customer. So that includes your the payments, account services, financial, all aspects of the financial services, from investments to pensions to mortgages to everything else, through a single channel. So definitely the digital banking platform becomes imminent over here and imperative to provide these sort of services to their customers.
And Vipin, perhaps you'd like to come in on this one as well.
Sure. Thank you, Robin, and good morning and good afternoon to everyone. I completely agree with Ritesh, and just to add to it, like you mentioned, Ritesh, which is, it's a single channel that provides all the financial services, to the customer. That's really the endeavor. But one major change that I'm also seeing between pre-COVID and post-COVID is the way banks have prioritized digital banking solutions. Now, pre-COVID, if we look at the features as part of a bank's technology transformation initiative, if digital banking was a good to have or a should have, that has now changed to a critical must have. That has now become the primary objective for a bank. That's a big change that we see. And this is reflected in in some of the deals that we've been tracking. So as IBS, we track a lot of technology system sales purchases. And between 2019 Q3 and until now, that's 2020, that's from Q1 to Q3, the deals of basically the digital banking deals as a percentage of the total number of banking technology system purchases has increased from 20% in 2019 to 35% in 2020. So that's a big jump, and we expect much more, in terms of the number of deals to come through. So that's the, again, a big change. One of the other changes that we're seeing is, of course, with regards to how a bank looks at, a digital banking solution. Because earlier, the focus was probably only just on the origination. So a bank would claim to have a digital banking, channel, but then really it's just an origination point. the customer would still need to visit the branch at some point, complete the documentation. Now, what banks are looking at is end-to-end servicing, which means they need to have a broader digital strategy and build the digital banking solution around it. So that's the a big difference. So what Harris touched upon in terms of the various onboarding requirements of a customer around video KYC, which is all the remote and contactless onboarding requirements are all essentials for a bank to and they expect these as part of the solution. So things like video KYC, face matching, the ability to accept scanned documents, OCR, and so that's again a big change than what we're seeing in the digital banking solution and what banks are looking at from a digital banking solution post-COVID.
So
Thank you,
Vipin,
Vipin.
I would
Please, Ritesh, carry on.
Sorry, I was just about to say you're spot on, Vipin, and that's what I was about to say in terms of we have walked past that bridge of a digital overlay and digital lipstick, right? Because earlier the banks used to provide the digital services as a digital bank, just as a channel. We have walked past that bridge. It is not sustainable anymore because that doesn't serve the purpose. So basically, we are looking for a complete transformation into the underlying services and platforms which can really cater to that.
Yeah.
Okay, in which case that brings us to the next question, the obvious question, the one that requires a magic wand. How can banks with legacy infrastructure compete with challenger banks and fintechs? Harris, perhaps you'd like to come in here.
Helps if I unmute, sorry. Yeah, it's how, I don't think they have a choice, they have to. So, I mean, we've seen.
But how do they do it?
How do they do it? Okay. They, I think irrespective of their infrastructure and the type of the bank, digital channel, as it's now the channel of choice, has to be embraced by any financial institution. Now, I think a good way to go about this is to ensure at the first stage to have an omni-channel engine in place. So you need to have omni-channel, remove your digital silo applications, okay? This way you can ensure consistency of data, consistency of experience, and lower operational expenditure, okay? While also being able to offer good UI, UX, and the security. Then on top of this, you add value-added features that I've mentioned before, such as PFM with financial calendars, etc. So irrespective of the backend system, the omni-channel engine and the user experience needs to be world-class in order to compete with the neobanks and the fintechs and the tech fins, okay? So I think financial institutions need to ensure that they partner with the correct digital banking platform experts, irrespective of what size of bank, what tier of bank they are, or if they're a private bank, a retail bank, a corporate bank, or a combination. They need to have a correct digital strategy in place that lies on top of their infrastructure, okay? So that it's, so their end customers do get a world-class experience. We've seen the likes of the neobanks offering world-class digital services, and they're taking the market share. So it's something that they have to do. We have clients that have old legacy systems, but because they have our omni-channel engine and state-of-the-art digital channels, they are very successful. So I think from my perspective, omni-channel is the way to go.
And your thoughts, Ritesh?
So it's a very interesting question when we think about the legacy infrastructure, because if we think about the top 10 banks, top 10 global banks at the moment, they have been there for over a century. So banks have been built to last, but that mindset has to change. So banks now need to adapt to ever-changing customer behavior and the technology innovation. And for that, what we need, not only, as I said, like we have walked past that bridge of the digital overlay as well as the digital lipstick. So we need to transform from end to end. And banks need to have a 360-degree view on a customer, and that's what the quest is. Everybody is looking for that. They would like to understand the customer so that they can provide the better customer services. They would like to have a customer journey orchestration so that they can understand all the touch point of a customer. So to do that, banks need to partner, and what Harris has said, with the right partners in the ecosystem and partners with the fintechs as well. It's not only about providing the cool stuff in terms of the personal financial management, because that is not enough. Because when you think about the fintechs at the moment, now the challenge is on both the sides. The fintech have a different challenge when we think about the fintech, especially the banks or challenger banks. They might have the numbers of customer, but when we look into their cost of customer acquisition as well as their cost of capital, that is significantly higher. So the incumbents and the traditional banks still has an upper hand in terms of the books, and they can offer multiple services to the customer. So I would still say the incumbent banks are sitting in a very good position if only if they can change the way they operate and provide services to their customer. It's no brainer because they have got the customer, they have got the money, and they have got the services that they can offer to the customer. What they need only to bring all that together and provide a value to the customer. And by transforming the infrastructure, by bringing in the right partners on the digital banking platforms and building up the right partnerships with the fintechs around.
Yeah, very well. I think Ritesh is absolutely right. Financial institutions, incumbent financial institutions, need to move away from their comfort zone because it's obvious with the new players in the market, they need to offer services to their customers are screaming for. So absolutely, Ritesh.
All right, well, let's move on. If we know we've got to change and we know how we've got to change, where are we going to make mistakes? What are some of the common failure points in a digital banking strategy that banks need to be considering, they need to be aware of to avoid?
So the first and so yeah, go ahead, Harris.
Go, Ritesh. Go, Ritesh. After you.
So the first and foremost is about the culture, I would say, and that goes without saying. So banks need to transform the culture and the mindset, and they need to transform. They need to come out of the myopic view, and they need to look into the bank as a customer, that what customer is expecting from the bank, and then transform. Because only migrating your workloads to the cloud or building AI and ML engines are not going to be sufficient. There are enough challenges with the banks or the payments or the financial services overall. So what they really need to do is understand the scope really well, and they need to come out of the mindset of the products and services. They need to understand the customer, what customer is expecting now, in 12 months' time, and in the future. Because by the time banks start building up the products and services, they might not be relevant to the customer. Because they need to bring in the time to market. And how they can do that by bringing in the right partners, by bringing in the right technology, by upskilling, reskilling their own people, by changing their culture. The common failure points, what I can see, is not having a myopic view, not learning from the tech fins, not learning from the fintechs. And generally, we have seen that if even banks try to build a digital banks, and we have seen both sides of the story, the success and the failures as well, in Asian and European market, more so in the European market. So bank has got the support and from the regulators as well at this point of time. And the regulatory and compliances have been a significant challenge for the large players versus fintech. So that could be one of the areas as well where banks need to focus on.
Harris, perhaps you'd like to come in now.
Yeah, I mean, I'll just add a few potential failure points from my experience and what I'm seeing from my work with NetInfo. It's some financial institutions still rely on their silo approach and say, that's it, we have we have a mobile banking solution, we have an internet banking solution, that's it, that's our digital channels finished. It's not enough anymore. As mentioned, people are looking for consistent experience, multimodal capabilities. So banks should not rely on the silo approach. They really, really must consider omnichannel sooner rather than later. Another failure point I see is reliance on the core banking vendor to provide their digital channels. I really do believe that the digital banking channels, omni-channel, needs to be independent of the core banking vendor, have the capability to run their digital strategy without the dependency on their core banking systems. I think this is a must. And also banks that aren't willing to embrace open banking. I know it's been a directive in Europe and all financial institutions have had to do it. But I believe the quicker banks look into open banking as the way forward, it will make life more convenient for end customers and introduce many possibilities for the bank to collaborate with third parties. So they need, via open banking, to do a bit of reinvention, I think.
So I've just got one more point over here, what Harris has said about the open banking. Because the challenge is, like in European market, it's a directive. And what you can see as a result in the global market, where open banking is not regulated, it has fared well than in comparison to where it is regulated. So the challenge is the banks are not able to capitalize on the open banking. They have implemented the open banking, they have created the channels, they have created the APIs, open APIs to be consumed by third parties. But they are lacking in capitalizing and making it as a revenue generation stream for themselves. And that's where the challenge with the banks at the moment.
Well, let's move on to another challenge for the banks. In addition to customer acquisition, how does digital banking help in customer retention? Because that's obviously the key thing for an institution. I don't want to open a platform up and see all my customers disappear from me. So, Ritesh, how do I hang on to them?
So as I said about, like, the quest is to get a 360-degree view on a customer. If you have got a platform which can provide a in-depth customer journey orchestration, which can do that, which can provide you the view of all the touch points of a customer, then the financial institutions are in a better position to offer the next best offer to the customer. So it's not only about providing the cool features, what I call it as a like personal financial management or the AI-based engines for the customer to manage their personal finances or budgeting. It's well beyond that. Basically, you're providing the services, but you're learning about your customer and providing a better services and consolidated services to your customer. So it's not only about the customer acquisition, it's basically retaining your customer. So now the customer is much more demanding because they are getting these services from the different players as well. So the banks need to be in a position where they can meet the customer demand on a regular basis. Customer expects a far better features, far better services on a regular basis. So the time is gone because once you open a bank account, you are with your bank or your financial services for longer term. No, the customer churn is high at the moment. So the customer retention is a key. And to do that, the banks need to have a wide amount of or wide technology behind it so that they can understand their customer behavior in a better way and offer the services.
Vipin, perhaps I can bring you in on this as well. What are we seeing on this basis?
Great. Yes, I couldn't agree more with Ritesh on this. Completely agree that one of course is customer retention is extremely important, perhaps more so than customer acquisition at some point, because especially for the incumbent banks, because now just to put things into perspective, to open a bank account in an incumbent bank would take on average around a week's time, right? And compare that to what we have for a challenger bank, or a neobank where customers are able to open accounts in a day. So the customer switching has, that time to switch from one bank account to other is just, drastically increased. So, I mean, reduced. So customers really don't have or think twice about switching a bank account. And that's something that large banks and your conventional banks need to keep in mind. And that's where digital banking comes into play. A lot of the customer retention, aspects are around, meeting the customers' basic expectations around user experience. Give them a hyper-personalized experience, which is what a lot of challenger banks are doing. Which is, and like what Ritesh talked about, which is the next best offer, and give them a sense of how well you understand the customer. And then, of course, it's the ease of access, the omni-channel, concept that we're talking about. The platform is extremely important here, because for a customer, the user journey should not be any different from one channel to the other, and that's important for them. So that sort of seamless, experience in terms of accessing all your banking services is important. So that's where digital banking comes into play. One of the other things is, of course, where, as part of customer retention, you're looking at, various strategies that a bank has to formulate around, user journey mapping, around, customer segmentation. How well are you able to segment your customers? For that, you require data. And for that, you need to be able to have a digital solution which is able to capture all the customer preferences, the customer behavior across the channels. And that's extremely important, which is possible through a digital banking channel and a digital banking solution. And of course, developing the sort of rewards and loyalties, having the right feedback and measurement, for customer retention is extremely important. So all of these are, essentially possible through a digital banking channel, but a solution. But like what we've already discussed, it's not just about having, a single mobile banking channel and you're done with it. You need to have, a broader digital banking strategy, which is end-to-end, which is not just limited to the front office. It needs to flow in through the middle office and the back office. That's the only way you'll be able to leverage the data and really provide the customer the sort of experience that they are, getting from these competitors like, the GAFA and the challenger banks. So, that's essentially very important. One other aspect, which of course, Ritesh has already touched upon, is the open banking. Banks need to ensure that they have a platform which is able to easily integrate with, all the various, fintech and the PFM solution providers, and all of these, point solution providers, which are best of breed. So rather than you having to build something in-house and spend that time and perhaps not having the expertise to do that, it is important that you have the integration capability to be able to connect with these service providers and through them provide your customers that experience. So, all of these are essentially important for customer retention, and that's how a digital banking platform really helps customer retention.
Okay, let's move on. It's time to polish up the old crystal ball. Harris, what is the future of digital banking? What are the features and functionalities that you would expect to be the norm in the next 3 to 4 years?
Okay. Well, we've touched on them all.
Well, you're on the spot there, haven't I?
Yeah. But I really believe if there are any banks out there that haven't embraced omnichannel, it's mandatory for them to offer a world-class service going forward. So that, I believe, omnichannel has to be one of the top 3. COVID has just compounded the lack of willingness to go to a branch physically. So I think remote onboarding and remote capabilities in general are going to be the future going forward. And then my third would be open banking from a global perspective, not just from a European directive perspective. I think it's going to make life more convenient for end customers and introduce a world of possibilities for banks that embrace it to collaborate with third parties. So I think that would be my top three.
And yours, Ritesh?
The future of digital banking, it's again, from the tech perspective, the cloud and the AI, ML, and all good things that we are talking about regularly. So that's what we are going to see, the increment. From the functionalities perspective, again, as I said earlier, we are moving from open banking to the open finance, and there are quite a lot of discussions around, and some examples out there already in the market, in European market. So the customer expectation is that they would like to see it as a supermarket. They would like to have services provided by the banks or by a channel. Doesn't matter whether bank provides them or bank just facilitate a channel. So that's what we are going to experience in the next few years. And that is going to be driven by the market, the innovation, and the regulatory changes as well across the globe. From the functionalities, again, I'm seeing a different trend as well. So where the banks are offering a better services into the, say, cross-border payments. It's not only about earlier when we look into, if we go back into past just on the cross-border payments, it used to be a pain point for a customer where customers are using the different channels for moving money from different countries. But now banks are offering competitive services. So they are, I would see the more focus on that front. I would see more focus on the consolidated account services from the banks and complete digital services from the banks, likes of the fintechs or the challenger banks.
Okay, now my final question will come to this, and then I'll come to the audience questions because we've got quite a few we'll try and get in the next 10 minutes or so. But mine, gentlemen, how has digital banking changed for the end customer, given the elephant in the room? And the elephant in question is not the digital banking platform, it's this pandemic. So Ritesh, how has digital banking changed for the end customer in this environment?
Significantly, I would say. And if I can talk about the innovation in the retail banking, what we have seen in the last 6 months, I haven't seen that in the last 3 years. And I just hope and wish that momentum should continue. Not the pandemic, but the momentum of transformation should continue. So across the globe, I'm referring to, like we have seen that in Asia and Europe and other regions as well. So complete digital banking channels where people can open their bank accounts without walking to the branch, or, and that is one thing. The innovation which have happened overnight and which a couple of banks have done in the European market, where they have changed the offerings on their accounts, where you can give your card to your neighbor and put a block in terms of how much money they can spend, and you can give them card to do shopping for yourself. So, and that is only possible through the digital banking platforms and the services, because if you think about the legacy platforms and the services, they are not really capable enough. So what we are seeing, the change in the customer behavior and the significant rise into the channels, digital banking channels or the mobile banking, the contactless payments, and especially we are seeing a rise in the biometrics payments and the biometrics authentication as well.
And a final thought, Vipin, from you on this, from your research.
Sure. I think one of the most important things that we're seeing in terms of the end customer is the fact that it's no more just the millennials who are accessing digital banking. From personal experience, I can say my dad, who's never really been a fan of mobile banking, has had to use mobile banking without an option. And I think now I'm seeing that change, and not just personally, but across markets as well. There is a trust that's developing even in the Gen X, and the ones who were mostly branch first, in terms of the access of banking services. They are beginning to trust and understand the convenience of digital banking. And that is expected to stay even post-COVID. So that's a big transition there. And, so that brings in a whole segment of customers onto a digital channel, which wasn't earlier there. The other part is, of course, this base expectation now, which is around contactless banking, with COVID and hopefully, post-COVID again, there is that convenience factor that customers are getting used to. Some of the questions that come up, especially again, this is going back to some of senior citizens ask about, I have a term deposit and how do I renew it? Because I need to go to a branch and do the paperwork. And that's, a bank that's not able to provide an online service or facility to do that, then, you lose favor. And, if you would possibly or potentially then lose that customer as well, if, close enough. So that's a change that end customers are, they are looking at all of these facilities that can be provided online, which earlier wasn't available. So that's a big change for the end customer. The other part is, of course, the mobile payments, the integration of, with all the various e-commerce platforms, with all the various merchants, the ability to make payments, online is extremely important now. And you're seeing the adoption of mobile payments across markets, through digital wallets. And and even if it's just a matter of perhaps buying groceries, you are now forced to use mobile payments, and then that's, if a bank doesn't offer that, that becomes a bit that's a straightforward and negative for the bank from a customer experience perspective. So that's again what's changing for the end customer is they're looking at every possible service in the bank and how that can be accessed online, and so banks are being judged. So it's important for banks to then step up for sure. So yeah, that's what I'm seeing.
Well, let's move on. I want to try and squeeze in a couple of questions from the audience, and I'm going to start with this one, and it's asking for our views on a centralized customer base having the choice to select a bank that offers the quickest and best transactional service, irrespective of customer relationship, with all security checks in place. Now, I'm going to expand on that and say, I believe quite firmly that KYC data is actually going to be tradable among institutions, because if I have an open banking platform and one institution has recognized me as a customer, that knowledge base is something that they can pass on to another institution rather than have the second institution go through a KYC process again. And it doesn't matter how slick or how fast it is, the fact of the matter is that you would still have to do it. But is there a way of having a customer base that's known on the platform that everybody can access?
I think in brief, it's open banking. I think that's what we're talking about. Ritesh, correct?
Sorry, Harris, go ahead.
I was going to say, it's just as long as all the parties involved are embracing open banking, this is very possible and happening now. Sharing KYC, sharing transactions from an open banking perspective, once the ecosystem's in place, this is a part of the future for sure. I don't know if Ritesh wants to add anything.
Sure. So in terms of the shared KYC, that's everybody is looking up to at the moment, and there are some proof of concept which are already in place, and this goes well beyond the open banking, because open banking still depends on the customer consent, but that is limited to the accounts and the payments. Unfortunately, that is not reaching to the KYC at the moment. But yes, there are platforms and the innovation which are in progress, which we would be able to see in next 6 to 12 months time.
Okay, and one more, I think we'll just get this in before we run out of time. AML and AI capabilities, what are the ones that are important for a new digital platform? What are the capabilities that a bank should consider as its top priorities? Harris.
As part of a digital transformation strategy, security is paramount importance. You can't really say from the two mentioned there what should be left behind. It has to be, for any digital transformation strategy, you have to ensure that security authentication is in place in order to meet the legislation of the specific region or regions that you're working in? So it's a difficult question to answer, I think, straight off the bat. I can't pick something. I don't know if Ritesh has any insight in this.
So from my side, like there are two different things which have been combined together, the AML, AI. And what I would say, like, to provide the better customer service and having a stringent AML and the fraud prevention and fraud detection, you need the amalgamation of AI and ML, the machine learning. And the future in this space that I would be looking at is the shared intelligence, because within an organization, your data is as good as the data that you have. And the fraud prevention and the fraud is basically becoming more sophisticated. So basically, you need that large amount of data shared across the different financial institutions in one time. And that's what we call it as shared intelligence. Not just transacting, not just sharing the data, but sharing the intelligence like a synthetic data. And that is the future.
Okay, gentlemen, I'm afraid I have to tell you that we have run out of time. So I'd like to say thank you to Harris Marcou, thank you to Ritesh Jain, and thank you to Vipin Vishwanathan. And thank you especially to those of you who have been listening and watching. I should mention that the NetInfo IBSI white paper that accompanies this webinar will be made available to all. Thank you very much for your attention.